Good morning, afternoon. I don't know, depending on where you are. Hope you're having a great day. Welcome to another edition of Insurance Questions Podcast. It is Wednesday, April 17th, 2024. And believe it or not, this is episode number. Anybody?
59.
You're so close, Don. 60.
Is it 60?
Episode 60 it is.
Oh,
It
that's
is.
awesome.
And
Our
let's get
impromptu yesterday
let's
was 59.
let's get this out of the way before Donnie says something inappropriate because he's usually the one.
Oh, whatever. Quit deflecting because we all know
the
it's you.
statements and opinions put forth on this podcast are solely of Eddie Buffalo, Donnie Lowe, and Sassy Sarah. And this is purely for entertainment purposes.
There we
That's
go.
good.
Look at that. All professional.
Come this week to a theater near you. Insurance Question Podcast. You'll laugh, you'll die, you'll kiss 12 bucks goodbye. Get some popcorn. We have special Sassy Sarah popcorn buckets and special Donnie Lowe cups.
Oh my God. We're going to have to add that to the Patreon. That's hilarious.
Oh, look at me. I'm drinking out of Donnie Lowe's head. Guzzle, 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 guzzle.
Well, I don't want my head. I'll come up with a logo to put on it. But yeah.
Do you notice I never include myself in there when I'm ripping you guys apart or saying something goofy? You know,
I mean, it's
I'm like a cartoon character as it is. So
So
I
we-
can't imagine what you'll come up with.
That's
oh
right.
yeah, no. So we need to make a cartoon character of you and put it on a t-shirt and then running away from a buffalo because you're Eddie Buffalo.
I think we have a guest coming on today. Are you there,
Look at
Christopher? We don't see you. Can you guys hear those sirens?
No.
No,
That's a pretty good microphone. You really couldn't because that was like super loud.
no.
Christopher Switek, what are you doing here? I thought you had an interview today with the Buffalo Sabres for the head coaching spot.
I know.
It's not till tomorrow.
Oh,
They're
wanna-
interviewing Ruff today.
I
The
wanted to
opinions?
let all the players have their exit interviews first.
the opinions and statements by Christopher Switek are solely of Christopher Switek and solely for entertainment purposes. There you go. You missed out when we were doing that. So where you been? We haven't seen you in weeks. You don't call, you don't write. What's up with that?
That's not true. I don't think it's been weeks, maybe a couple weeks.
Well, 'cause I know you always creep on everything. You always like everything and share it, which I appreciate.
I try to, yeah, definitely. You guys are funny. Yeah, I guess things have just been a little hectic around my neck of the woods, so to speak.
Gotcha. I want to let everybody know that we're going to change up a few things next week. On Tuesdays, it's not going to be Insurance Questions Podcast. What's it going to be, Sassy Sarah?
You ask me questions and we don't talk about it.
What did you buy today? What name did you buy, Goofy?
Oh, hold on. I gotta go back and look. Jesus. Tax questions podcast.
Wow, why? How amazing that it'd be text questions, with us being insurance questions. What a stretch to do a show that's tax questions podcast. Oh my gosh.
So
I
hold
can't
on,
believe
hold
it.
on. You cannot. So I wanted to nap today before our podcast.
How'd that work
So
out?
you have to provide me grace today. I'm just saying. I'm
right
still.
now, I'm super
Fire.
jealous of Christopher Switek because take another sip of coffee, Chris. Ah, you bastard. You bastard. Do you know that they opened up a Timmy Ho's here and they're going to be opening up more in North Texas? So I can't wait. Like the
Really?
one closest to
That's
me is like
awesome.
40 minutes away.
Never
So,
had one. I'm
yeah.
assuming it's good coffee because
Yes.
the
Yes, it's
certain
addictive.
green icon one that's on almost every street
Ah, I hate that
corner
coffee.
is burnt, and I would prefer not to have burnt coffee.
Interesting.
Look at that second podcast that I've showed everybody my tongue.
Yes, please stop.
So, Chris, we have a customer today. It's
Okay.
not me. It's not Donnie Lowe. It is Sassy Sarah. What did you ask me the other day, Sassy Sarah?
Well, so my question is, I've always looked into insurance for my kids because, after you have a birth of a child, you get the insurance list, usually from the company. I don't know if I can say it, so I'm just going to say the person who makes all the baby food. They also do life insurance on children.
They do.
They do. So I've always looked into it, but I've never actually pulled the trigger and got it. So my question would be, for example, I like the idea of getting $1 million policy for my son, not because he's only 12. I'm not looking for anything major to happen. It's more of when he's an adult, I know it's going to be a cheaper policy for the rest of his life. So the question is, one, what is the maximum amount I can get? And then what is all kind of included? Because I know with adults, you have different types of insurance. Is it limited on what you can get for children?
Well, first of all, you can't get $1 million. And why can't we get $1 million for her, boys?
I would assume
Well-
that crazy people in the world that's
Well,
just
I'll chime in for a couple of reasons. First of all, with juvenile policies, it's going to be a whole life policy. It won't be a term policy, which means he would have it until he dies. To be blunt, I know life insurance is not the warm and fuzziest thing to talk about. Now, as far as the limits on amounts, I believe that it may vary based on the company. I know that my particular company that I work directly around, you also have, the parent also has to have at least the same amount of coverage as the child.
It's more than that.
Donnie's shaking his head. I heard it rattling.
I believe it's either 3 times or 4 times the amount of the juvenile policy, and it depends on
Yes, you are.
the age
No,
of the
you're
child.
correct, Donnie. Yeah, I forgot it's actually, yeah. So as far as like grabbing $1 million, I can't, like I said, different companies may vary. I don't know if there's a limit on what you can get, but it would be based on how much you have for yourself. Yes.
Right.
Okay.
So the other option would be, and Donnie and Eddie can chime in as well. For example, if you were to get a certain amount of coverage for your child, there's also the option to buy paid up additions along the way where they can get additional amounts. I believe it's every 3 years, something like that for a period of time. So I guess as just as an example, if you got, let's say, $200,000 policy, they would be able to get additional amounts every so many years. And I've not sold any of these yet like that, and I believe it's also, you can get those additions without added underwriting.
Okay.
Right. So the guaranteed insurability rider will accommodate that. And what happens is, for most carriers, when the policyholder, or say the juvenile, turns 23, every 3 years, they can up their insurance by a certain amount, whatever you put in there, and they can do that until the age of 45 without any underwriting at all. And there's also typically, probably for most carriers, there's if there's a life-altering event. So if there is a marriage, so say, Sarah, your son gets married, he can activate that additional insurance the year he gets married. Should he have a child, he can activate it in the year that he has a child. But otherwise, it's every 3 years up until age 45 for most carriers.
Okay.
Which is a great thing. So no underwriting. So even if, at age 30, all of a sudden, you've got somebody that was healthy and they have type 2 diabetes real bad, or something else happens, health-wise, they can still get that additional insurance. Bless you.
Thank you. I was trying to hit the mute button before I sneezed. I'm like, oh,
No, you
Lord.
did. You did. You
So-
made it, but we saw you.
There is one thing that Donnie and I were really surprised at because I mean, I don't know about you, Donnie, but I've always worked for one of the big guys. And I'm so silly, my own website, ebiagency.com. If you go to www.ebiagency.com, you can actually shop online for yourself without talking to anybody. And I'm going to go all the way to the bottom. There's our contact information. Oh, did I do the wrong one? Hang on a second. Sorry.
You're on the wrong
Yeah, and on
page.
this one, on the Insuring Me Now Direct, it's right through EBI Agency. If you can see all the different products, but if you look at the bottom, it'll show you the carriers we do. And I've never, ever, ever thought of Gerber. I mean, actually, my parents had it for me. I know a lot of my older cousins, their parents bought it for them when they were tiny, tiny little babies. And there was one thing that I was really taken aback at. Like the boys were saying, if you're under 18, number one, you can't get term insurance. There is one carrier that you can, but it's more of like an IUL, which is a whole other thing, and it's not going to be making money. With number one, you can get $50,000 for your kids. And these are all products that pretty much anybody sells that have some type of dividends, some a little more, some a little less. And we were doing some comparison shopping for you yesterday, Sarah, me and Donnie. And the one carrier that we looked at for $50,000 was actually $11 cheaper than what I told you it was about what it's going to be. And one thing I want people to remember, that boys are always going to be a little bit more expensive because girls live longer.
Right. Well, I like to think of it as girls watch the boys do dumb stuff and we laugh. The boys do the dumb stuff. So
I mean, you watch me do and say dumb stuff on a daily basis.
exactly. And all I do is laugh. So I
This is
understand the difference.
this is something I didn't know, and Donnie didn't know it, and I'll be shocked if you know, Chris. But with Gerber Life Insurance on a child's policy for 50,000, guess what happens at age 18 automatically without a change in premium? You know, Chris?
Ooh, I know because you told me.
I told you.
I will let you tell the
Yes.
secret though.
What happens? I mean, you're paying a little bit more, Sarah, but what happens when Aiden turns that magical age of 18?
It doubles.
That's coverage.
So instead of $50,000 on age 18, if luckily your kid's still alive and you didn't kill him for aggravating you or something like that, it automatically becomes $100,000 of coverage. And the premium does not go up, Chris. And they can hold on to this policy until they ever want to get rid of it or they pass away. And that
that's
just blew.
that's for Gerber?
Yeah, and that just blew me away, you know? What's nice that a lot of the different carriers that we work with, and some of them that we don't even work with, say if you had a special needs child, a lot of people are very nervous about trying to get life insurance, you know? And there's a lot of companies out there that one of the fraternals actually will, no matter what, will give the kid $5,000 of insurance without any type of insurability. They won't turn them down. And there's also a large company that I used to work with that a special needs child, as long as they're not on a feeding tube or a vent, from ages 15 months to 49 years old, they can actually get $50,000 of insurance without worrying about insurability.
Yeah.
So I'm glad we opened up this can of worms, because a lot of people think, you know, a lot of people get kind of weird about getting insurance on their kids. And I think I talked about this months ago on a podcast that I had a friend that I'd always say, "Hey, do you have insurance on your kids?" She goes, "No, that's disgusting." I'm like, "What do you mean?" She goes, "Well, I'm gonna get insurance on my kid hoping they die." I go,
No.
it's not that for that reason. I mean, number one, you want to ensure their insurability by getting the insurance when, I mean, the younger they are, the cheaper it's going to be. And they can hold on to that whole life product till they're dead, or say down the road, all the dividends that they've made on the policy over all those years. When you're looking at that little baby, so most people aren't thinking about college. But guess what? It gets here pretty darn quick.
Yes.
And don't get me wrong, it's not going to pay for all of, whatever's needed at college. But hey, if the kid needs books and you're a little bit short on cash, just dip into that. There you go, honey. Or Katie, here's the money. There you go, honey. Enjoy yourself at Niagara. And congratulations for being awarded that award for your presentation this week at Niagara.
Oh, nice.
Only 2 people from Niagara got it, and Katie Bednaris was one of them.
That's awesome.
Thank God she got my smarts, right?
So I do have a question as well.
Yes.
Because it won't affect a lot of people. But what if your child has a medical issue? For example, type 1 diabetes, or they have heart issues when they're born, or everything that could possibly happen.
9 times out of 10, most child and juvenile policies are going to be simple. What am I trying to say, Donnie? I'm losing my thought.
Simplified. Simplified issue.
Underwriting. Because if you put down that Aiden has type 1, which that's what you'll be doing, what they're going to do is a med check. Most states, I'm not sure about Texas. I'd have to check on that. But most states do a med check. So anything that you put in your body, that's going to show up on a report. So I want to say that he's still going to be okay because I think it's going to be simplified coverage.
Mm-hmm.
But don't be surprised if it gets rated a little bit higher because of that. It's not going to be crazy because he's got his age on his side and because it's not a ton of money that
Which would also be beneficial to get the life insurance now.
Mm-hmm.
Is for people not to have to, if they do have a medical issue, it's lower rates than if they were an adult with a medical issue, or they get, let's say I bought it when he was a child as an infant, it'd have been a heck of a lot cheaper than what it would be now.
And I'm going to give him another plug. Mike Savio. What does Mike Savio do, Donnie Lowe?
For every grandchild that he has, he buys them a life insurance policy upon birth at 15 days. And instead of giving them gifts every year for Christmas or their birthday, he funds their policy for additional coverage.
Oh, that's
and
awesome.
it's a great way to do that.
Mm-hmm.
And then so down the road, you talk about the living benefits of permanent insurance, where you can utilize that for college, down payment for a home, an automobile, whatever the case might be, start a business. You can use some of that cash value for that.
I know we meant to talk about insurance today, but Sarah asked me a question and I kind of I didn't blow you off, but I wanted to save it for the podcast. You asked me, hey, what about getting an annuity for my son? Boys, chime in. Why can't she get an annuity for her son?
Too young.
Because he's too young.
Well, it's more of, so for example, the way I'm looking at it, especially since I own my own business, is I want to look at ways to build generational wealth for my children, where they don't have to struggle as much as I have in my adult life. And what's the age limit for an annuity? What's the age limit for some of the products that you guys sell that would be a good venue for that? That
You
might
guys know
actually
that?
be also beneficial for our listeners.
Typically, it's age of 18.
Yeah, it's 18. And I mean, those are all great points as far as, helping younger folks, get a start on all that stuff. But like, quite honestly, and again, Donnie or Eddie can chime in. I mean, if you were talking to me, Sarah, I mean, we could set up, there's ways you can do that through a life insurance policy, a custom policy that can fund, create funds for that child later on in life. I mean, it can even be where it pays out basically retirement funds on a yearly basis. So,
Yep.
Especially if you happen to have, a fairly decent chunk of change that, might be laying around, lazy money, whatever the case may be, where you can dump a bunch of it into the life insurance policy over a period of time, because you can pay off a policy in as little as 5 years, and where you don't pay any more premiums for the rest of the life of the policy, but it does continue to grow. And again, I'm not familiar with all carriers, as Eddie says. He might be able to elaborate a little bit more on that, but I know with who I represent, you definitely can do that. I'm going to have to go. I've got a call coming in.
All right, Chris. Nice
Yeah,
seeing
Chris.
you. We'll talk to you later. So there's a couple things that I would do, and well, I'm going to say one thing. Like, I've been in the business for a while, but I like the flavor of the month. If there's something that I believe in and like selling, I'm going to sell the poop out of it. Just because if I think it's a great thing for my customers. But I was just looking at an annuity for a friend of mine, and friend now, but they started off as clients. And there's this one product. I love it. 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 And so for the hell of it, because I work with so many different companies right now, I'm like, I'm gonna float it out there, see what they come up with. Whoa, was I surprised, because there was actually better products out there. It's such a competitive market now. I mean, and plus you don't even have to tie up your money that long. Some of them you can do a 1-year annuity. Some of you can do a 2-year annuity. Some you can do a 10-year annuity. And what's cool on a lot of the annuities, like say if you say, okay, Eddie, I'm going to give you $100,000. Years ago, it's like, that's it. Your $100 is in there. You want to take it out, you get penalties. You're not going to do it. So you better be sure that you don't have to touch that money. And it was taught to me that way too. But now a lot of the products, they allow you to take 10% out a year without penalties.
Right.
They have other ones that at the end of that term, if you enjoy how it's producing, keep rolling, baby. You can keep on rolling in it. And Donnie, when you're done with, say, your 1, 2, 3 to 10-year, and you get all your annuity money, how can that be paid out to you? Do you know? Because I don't. I'm new here.
Well, I think it depends on the annuity company. So, and for educational purposes, annuities are only offered through life insurance companies. So that's one thing. But depending on the company, typically you get your payments on an annual basis. So you can have it stretched out over 10 years or 20 years or 30 years, depending on what the annuity is. And again, it's when you meet with your client, it's what are their intentions? What do they want to do with it? Some people will put a lot of money into an annuity and have the annual payments pay for a larger life insurance policy, as an example. So the payments go directly from the annuity to the life insurance policy.
What happens if I die, Don, and I don't get those funds? Where do those funds go? All to Sassy Sarah? Do they go to me? Do they go to the state? Where's all that money go if I croak off?
When you initiate an annuity, there's a section there for beneficiaries. So if the annuity is still in existence, whatever is left in the annuity is transferred to a beneficiary. So the annuities, it's a complex thing because there are so many different types of annuities.
You hate to
Um,
say that, but it's true. I mean,
Yeah,
you know, just like in insurance, there's an exception to every rule. With annuities, I mean, there's something out there for you. If there's something you want to do with your money, like I heard a horror story the other night. And I didn't even share this with you guys because I didn't really think about it till just now. But I belong to a men's group, and they were going over the books, and they said, "Yeah, we had a 1-year CD, and you know, we didn't tell them what we wanted to do with the money. So they put us into a product that was 0.00. And now we're stuck for another year not making any money." I'm like, what? That's just, I didn't realize that was done like that, you know, because the banks right now, smaller banks are having a hard time. I'm not beating them up. I'm just saying what it is, especially because in Texas, you have so many people moving from California to here because they can sell their house in California, buy a home here, and still have money. So what are you cutting out? You're cutting out the banks on putting a mortgage together. So, I mean, a lot of the companies that I worked for and that you worked for, Donnie, the dividends are around 6%. Some are less, some are higher. So the Texas banks, if you deposit $10,000 right now, they're giving you 6% interest because they're not making any money on the mortgages. So it's a very interesting time, you know.
is.
But
It is.
honestly, the best way to invest your money is contact Eddie Buffalo here at ebiagency.com. I got a great mattress. I can just shove it all in there. I'll watch it for you. Wink.
It's secure.
Wink,
It's secure.
wink, wink.
Call
Until
me
you go
Uncle
to
Eddie.
Aruba, right?
Uncle Eddie, watch your money for you. Let me tell you what. So,
And then all of a sudden, miraculously, you have a house in Aruba that you travel to all the time on your private jet.
Aruba, Jamaica, girl. Oh, we can't sing that song. I wasn't singing that
Oh.
song. No,
No,
we're gonna get
no,
wiped
no.
out now. Edit. That was not
I
a
think
Beach
we're at our
Boys
time
song.
limit.
Well, I have a question for you, Sarah, and I want you to be honest.
Mhm.
Everything that we told you, were you able to digest it? Do you understand it? Or are you confused as you were before you asked the question? Hey, I want to get some insurance for the Ginger Ninja that I have at my house.
So it was good information. If I want a more in depth, I know who I need to reach out to. Just because I know it does depend on what amount I want to put into it and what company you're going to purchase it from, or whatever the case may be, and more specifics that are needed that we can't cover in the podcast.
Now, I have a question for you. Donnie, what's stopping her from buying multiple $50,000 policies?
At the same time? You mean?
No, we'll every 6 months we'll buy some more. Can we do that?
That's a great question. I've never had that question, so I don't know.
You answered it for yourself when you were talking about it, about having X amount more insurance than you're getting. So yes,
Well,
you
yeah,
can
for
do
as a
that.
parent,
Mhm.
yeah.
But
Yeah,
you also
exactly.
have to disclose to that company that you're trying to get the new insurance through that you already have insurance through XYZ company, you know,
Oh, yeah,
or the
absolutely.
baby food company, whatever that might be.
The baby food company.
Yeah,
Because
but
it's not on
can
the
do that.
screen right there, that cute little baby. Looks like you,
That is
Donnie
the
Lowe.
cute-
Take your glasses off. I think
You
that looks
know-
just like you.
Maybe I need to Google what the Gerber baby looks like now as an adult, because
They
that's
look
the
like-
cutest little picture, and it has to be somebody's
Because
baby.
do you know they updated?
It
Because
was.
I remember a few years ago they actually had a contest for the new Gerber baby, but I think that's got to be a million years old. That picture, you know.
I don't know what year that's from. That's-
So I also want to make.
Her
What?
name is Ann Turner Cook, if you were interested. And yes, they do have what she looks like as an adult.
Don't say it's a girl because people say, "Oh, that's sexist."
We're not going down that conversation.
Yeah, why don't
as
you have a
Donnie
boy and a girl
mentioned,
on there?
Our time is up. So like,
That's
subscribe,
the only
follow,
reason me and
do-
Donnie are here on the thing because we got Sassy Sarah and you need two fellows with you. Look at down on the bottom screen. Looks like we got a Sassy Sarah Oreo going on. Let me tell you what.
See, on mine, it's you two are underneath and I'm on the top because I'm
okay.
number one.
All right.
I'm
All
awesome.
right.
There you go.
Quick announcement. It might be sooner, but as of April 24th, you know what? I've made enough announcements. Sarah, what's going to happen on April 24th or before that?
Again, you're asking me questions on things that we have not discussed, so I don't know.
Let's see. So, Sarah, when you're on Amazon buying socks, what else can you do?
Oh, you signed up to sell insurance on Amazon.
We are actually going to be the first insurance agency that is available on Amazon.com for annuities, insurance, and Bitcoin sell. So we're pretty excited about it. The latest we're going to be going live is the 24th, so it might be sooner. So I think this was a very informative episode. And please comment. Go say, oh, I took your spot away from me. Go ahead, say it, Sarah. Say it.
Oh, comment, like, subscribe. Well, you were talking over me when I was saying it earlier. Like, subscribe, follow, do all the things on all the different apps. Comment, help us get more reach. If you think somebody will benefit from this information, forward their information as well, or forward the podcast to them.
And I saw a very interesting thing. Do you know that 65% of people that watch podcasts do not like and subscribe?
Yes,
Really?
I'm
So,
one of those people.
If y'all still want us to keep on doing this on a regular basis, like and subscribe so Eddie Buffalo, Sassy Sarah, and Donnie Lowe don't have to sell pencils on the corner, okay? To keep this podcast going.
I will let you sell pencils on the corner. You're more of
I'm
a
sure you would.
salesman.
So, like we end every show. If you like working with people that are just like you, we're the folks to see. So for Sassy Sarah, Donnie Lowe, I'm your buddy Eddie Buffalo. Everybody have a wonderful week. We are going to have some kind of show tomorrow with Mike Casey. So tune in tomorrow, look out for it. And everybody be safe until we see you again. Take care now, everybody. Bye-bye. Oh, I gotta stop sharing again. When am I gonna learn how to do this stuff? All right, everybody. Have a great day. Bye.